Head of Research, PL Capital, to talk to us about markets and more. But Amnish, let me start off with this piece with regard to healthcare stocks and what it could mean, what this development could mean for them. Any counters that you are looking at constructively, not only from this development perspective, but even generally on the healthcare side? It's been a sector in favor.
Hi. So latest development actually gives more leeway to, I would say, all the hospital companies for charging more when the treatment is through the, you can say, whether the government pensions are there or various government schemes are there. Now, the margins will definitely improve. It's a big reset. It will not only benefit consumers but also the companies. Now, the extent of benefit will depend upon you can say, the companies which have got higher exposure to these schemes. They are obviously going to, you can say, get benefit. And as you rightly said, that the sector has been in the flavor. It has seen, you can say, run-up. If you look at last 3 years, the EV by EBITDA multiples of, I would say, most of the, you can say, the top names, they used to be, say, 15, 18 times. Now they are trading even up to, say, 30 times plus. So there is a massive re-rating which has already happened. So beyond this, if you look at now, the sector is more like in a steady state of growth, that most of the companies can give you, say, 15%, 17% kind of a CAGR over the next 2 years. But the valuations today, they are not, I would say, as cheap as they used to be. So here on you will make only the CAGR returns incrementally going forward. So in this space, as such, there are, you can say, stocks like, say, for example, Apollo Hospital at the current price after the recent correction, it continues to look good. One can even look at, say, Fortis, where there is likely to be open offer and, you can say, consolidation in the stake for IHH. So I think these two stocks in general, they look better in terms of you can say, the hospital space at this point of time.
Okay, so that's on hospitals. Amnish, hi, morning. I just want to go through some of the consumption updates that we've got for Q2, and let's start by talking about Marico, core FMCG first company, after HUL, to come out with a fixed set of Q2 updates like they always do. They have indicated that they've had a pretty good quarter in terms of their revenue growth, which is ahead of street estimates. Volumes are lower sequentially, but they're still in line with what the street was estimating. Overall, what is your read-through of Marico's Q2 update, and what does this tell you about the health of the sector? Because HUL on one hand flagged caution, but Marico is looking very sound.
This is Marico. Your update shows very steady trends for the company, whether it is, you can say, Parachute, where they have done well, or the new age businesses. Even their value-added hair oil, which has not been doing well from the last 2 to 3 years, so that is also coming back into reckoning. The top line is likely to be good. I think, given the fact that they have indicated very modest growth in profitability, you will see more pressure in terms of, say, your gross margins, also because of the copra prices which have gone up. But also, I think they are also going to share the burden of, you can say, GST, you can say, variations because of the stocks for the transition or in the inventory. So some hit will be there. So that will result in, you can say, some sort of modest growth in profitability. But overall, I would say very steady quarter. And just 30% of the company's top line has got impacted by the GST cuts. So I think it remains a very steady stock and should do well over the medium term.
What's not actually looking good is the Avenue Supermarts and the kind of update that you're seeing from them. The fact that it's a much more tempered Q2 update, the store edition as well has been much lower than what the street is anticipating, and most brokerages are now calling it a sell. And Amnish, it's been a struggle for Avenue, although so far year to date it's definitely lifted off from those sub 4,000 levels. But what are you making of the quarterly update on Avenue Supermarts?
We were actually expecting a couple of percentage points more growth rate because we had an early festival season which started this year. So given that the festival season is early, but however there were negatives also, say for example your floods or too much of rain shutdowns happening in certain parts of the country, and there might have been some impact of the GST also, because there might be some postponement of purchases. But in a model like Avenue, where you can say the general merchandise and apparel is just 20 to 23%. So the impact of that could be very limited. So to that extent, I think we were expecting a couple of percentage point more growth in sales. That is one. Secondly, the worst in terms of margin correction is over, because the kind of correction we were witnessing in margins earlier, 50, 70, 80 bps at certain points of time, now it should be much more moderate. And definitely, I think it is not only showing, I think the way the quick commerce is ramping up in India, with most of them reporting very high growth rates. So I think that is one of the reasons, particularly in the top, say 50 cities or so, where you are witnessing increasing competition to some of these brick and mortar modern trade stores.
Understood. In fact, the Goldman note as well, like Snehi was flagging off, they cut their estimates by 2%.
You see, as far as trends are concerned, I think 2Q upgrades are not the right metrics to look at that, because in many of these names, for example, there was some postponement of purchases which actually happened ahead of the GST transition, and that typically, I would say, it will happen more at the company level, because the trade is having inventory, say in staples, it might be say 30-40 days of kind of an inventory. So it is going to take time. So particularly in the month of September, the sales got impacted. And there is a limit up to which you can actually then push the inventory into the system in the last 1 week or so. So this quarter will definitely show the impact of that. Now, in terms of Kalyan, I would say that one needs to also factor in that the festival season was early, but at the same time we had steady increase in the gold prices. Because if you look at the gold prices have been, you can say, inching up at a very steady pace. And in this kind of a scenario, I think from the entire jewelry industry, one should expect only an average growth to come, and that too will be driven more by the realization and not so much in terms of say volumes.
Well, this week is going to be a crucial one. While sure enough, we're going to be counting down to Diwali, but Amnish, between LG and Tata Capital itself, we're looking at 30,000 crore rupees of equity that they're looking to raise. Do you think that itself is going to keep the secondary market a little abated, because so much of liquidity is actually going to move to the primary market issuances?
Exactly what is happening, not now, from past few months. Now, LG and Tata Capital are big issues, but in the past also we have seen spate of issues coming. On some days we have even three to four new listings on a single day. But having said that, these are the two large issues, and I think going by, you can say fancy, particularly for LG Electronics, I see reasonably good subscription to that number. So if you look at the past also, I think whether it is, you can say FI or whether we are DIA, a lot of money is actually going into the new stocks. And that is where there has been some sort of an issue in the overall listed market, because in the listed market, fresh funds inflow is limited, and even in case of FI, say for example, they are selling in the listed stocks and they are going in for the new issuances. So I think that is definitely going to have some impact on some of these stocks.